And we're going to take a look at some of the ticker symbols that were in play today. Okay, first up, let's take a look at HMNY. There was this big gap up open. As you can see, it was closed up 55% on the day. That all sounds super great, but as you can see, this black candle forms. A black candle forms when the close is below the open. This is the open, and then the close was down here at 381. But even though the share price was up 55% on the day, this black candle is signaling that the bears were actually in control all the way into the close. And as you can see here, it closed near low of day. So that is not what you wanted to see if you were a bull. Basically, the bears attack the rally. When we see the black candle form after a gap up open, that's your signal to go to the sidelines unless you are one of the bears attacking. Okay, so now the candles are likely to work their way back into the bands. As you can see, way down here, the upper Bollinger Band is way down here at 318, and that is along with the 100-day simple moving average at 306. And so this is the key support level to hold. This this basically $3 level, because right below that you have EMA 4 at 299. And so this was a big gap up open above the middle Bollinger Band, the 50-day simple moving average, and the 100-day simple moving average. So it might need to pull back, work into the bands before pushing higher. As you can see here, there was a giant volume spike. Many times when you get the giant volume spike after a big gap up open and a pullback, that's a signal, a sign of dilution, shares being sold, that type of thing. If you look here at the 15-minute chart, you will see that basically there was major consolidation today. The share price pulled back. There was a giant volume spike. There was a little midday bounce, and this is the current key level to break, which is the closing price at 1045, just a little above 440, around 443 or so. If they can get a close above that level, bulls, then that will signal a breakout higher. Okay, fail to break that level, and that will signal downside risk. If you look here at this candle at 215, there was a close below the middle Bollinger Band. That was another red flag. Once resistance failed to break, the share price consolidated, and then the middle Bollinger Band broke, and that has turned into resistance. There was a close here at the lower Bollinger Band level. Notice it was near low of day, and this is also this key support level on the first two candles of the day. If there's a break below this green line, that's going to signal downside risk, and that's going to put this 330.50 SMA level as the next key support level to hold. You could see a bounce, a technical bounce off of 330, so keep an eye on that level. We'll just have to see how this plays out. In order for HMNY to be back in play for us, it needs to get back above the middle Bollinger Band on the 15-minute chart. So keep an eye on this. There was a big move today, but it turned out to be a bull trap. Okay, CMLS, it ended up closing down 23% today. This is a stock that we had been charted on the way up, and then yesterday we did put out an alert saying basically that it was the bubble was getting ready to pop. The reason why is because it had broke above this 100-day simple moving average, which is currently at 0.641, and it pulled back below that level. Failing to break that level at the close above, following a multi-day run, signals that the share price is likely to consolidate and pull back. That is exactly what happened. Also, the 15-minute chart broke down, so if you were following the chart, you knew to lock in gains on yesterday. That was the signal. If there was a close above the 100-day simple moving average, then that would have signaled to keep riding, but that did not happen. And then if you unfortunately held today, now a bearish engulfing reversal pattern has formed. So this is the pattern. You can go back and read about this, but this is a very strong reversal pattern. Now keep in mind, CMLS is in a very strong uptrend. Candles are riding, above the middle Bollinger Band, riding EMA's 4 and 8 support higher. There was a close below EMA 4 today. So what that is doing, it's putting EMA 8 on deck, and also this key level, which was the high close resistance level from previous the May 2nd close. and then this close here on the 18th of May, and so we were looking for that level to turn into support. And since it was big resistance, it should now act as support. So you should get a bounce off that zone around EMA 13 at 40. If that fails to hold, then you could see a drop all the way down here to the 50-day simple moving average in the middle Bollinger Band, which is currently down here in the 34 to 35 zone. That is a huge support level. In order for CMLS to keep the uptrend going, that level does need to hold. Now this is a strong uptrend. Keep in mind, look at the big volume yesterday, and then the pullback was on lighter volume, but it was a big volume spike. But the long upper wick is a signal of obviously profit taking and possibly shares being sold. In order to dilution, in order to break out higher, it's going to need to get a close above the 100-day simple moving average. Right now we have CMLS on bounce radar, so we'll be tracking the action, looking for the 15-minute chart to heat up, and we'll be keeping our eye on these key support levels to see if it can get a bounce and keep the uptrend going. Trading the pullback on stocks in an uptrend is a much safer trade than trying to play a stock that's in a very strong downtrend. So just keep that in mind. Going with the flow is a much easier trade to make, especially for new novice traders. Okay, let's take a look at GBTC. Okay, this is Bitcoin Investment Trust. Bitcoin's breaking out. Unless you're living under a rock, Bitcoin, broke above 2,000. This is basically a proxy. You can follow Bitcoin by, this follows Bitcoin's movement. And so, as you can see here, this has been breaking out along with Bitcoin, currently at 294. This is hitting blue sky breakout levels. Closing at an all-time high close, hitting an all-time high today. This is very thinly traded, as you can see, only 141,000 shares traded today. But this is a super strong uptrend. We've been looking at different Bitcoin stocks. Currently, we've been following BTCS and BITCF. Are a couple of names. We're going down the list and charting stocks that are in the sector. The sector has been hot, so we expect that to continue as long as Bitcoin keeps breaking out. There's a lot of big news going on with Japan recognizing it as a currency. Russia is following suit. There's a lot of a big movement right now in cryptocurrency. It looks like the Winklevoss twins, their ETF, is actually going to end up happening now. So keep an eye on Bitcoin and Bitcoin related stocks. Take a look at the GBTC weekly chart. As you can see here, this is this is all the trading here. This started in May of 2015, and this is a beauty chart. Check it out. It was down here in the 20s, and then now it's up here at 294. So very thinly traded, but has this very, very nice uptrend going. This is just this stock is if this keeps heading higher, then that the Bitcoin stocks have some upside potential as well. You always have to weed through the penny stocks. It's always about the financing with the penny stocks and whether or not they're diluting. Check it out. So here it's hitting the top of this channel, and it's busting through the upper Bollinger Band. So it looks like it could peak out here and then maybe work its way back into the bands. That happened on previous pushes above the upper Bollinger Band. So we'll see if that pattern continues. But this is a very strong uptrend. Looks like it's at the top of the channel. You never recommend chasing. Look at all the big green volume bars. Keep in mind that that Bitcoin has wild swings, and it always is best if you can get in on the dip, and then that way you're able to sell the rip. Let's check out SMRT. Here's a stock that closed up 16% today. The annotations are a little bit off because I had it on a different size, but the bullish movement was above 30 on RSI and above 20 on Fasto. That's a signal the chart is heating up. This is a dead cat bounce gap fill play, and there was a close today above the bottom of the gap. There's a gap between this candle, the low of day on this candle, and the high of day on this candle. And then the other bullish development was the close above EMA 4. Notice the candles have been riding that resistance level lower. So now it's right at the next next resistance level, which is EMA 8 at 157. If it can break above that tomorrow, then it's going to be testing the bottom of the gap, which is just about 170. Keep in mind that the bottom of a gap is very similar to like the 200-day simple moving average, the 300-day simple moving average. It is a huge resistance level, and many times it signals a climax, especially after a multi-day run. So one of our strategies is to always lock in gains on a gap fill, and then that way you've many times, more times than not, you'll be very, very happy that you did. If for some reason it breaks out above the gap fill line, you can always jump back in. So it's much easier to sell into strength than it is into weakness. So if you've already got your targets laid out at 170, 173, notice that you've got the EMA 13 right here, then you could be one step ahead of the herd. Keep in mind, if it does break above EMA 13 in the bottom of the gap, it does have potential to run up to the middle Bollinger Band. You never know how far these plays will run, but keep in mind, if it hits resistance at the after filling the gap, that will likely signal a temporary top. There is a unfilled gap now also between these two candles with the gap up open. That is always a major red flag. The gaps, especially on penny stocks like this, tend to fill, and it sets up in a target for the firms that are shorting these stocks to pull back the share price to. So you can see a pullback to the bottom of the gap to fill the new gap that's below. So yeah, so this is a dead cat bounce play. These are the riskiest plays to make. One of the signals that this was going to bounce was the long lower wick on this candle. Notice this candle formed well below the lower Bollinger Band, and the long lower wick was accompanied with the giant volume bar. That is the signal that bounce players loaded. Always follow the money. Big players load at the bottom, and then they sell at the top of the run. So keep that in mind. Bullish volume spike at the bottom, and then we look for a climax volume spike at the top. Okay, let's look at SYN. Okay, this is another stock that made a bullish move today, closed up 16%. It had one of the classic setups that we look for, which is the close above the 50-day simple moving average, which is this green line here, currently at 57.2, 0.572. That is a signal that there should be more upside potential. It had been resistance. The SYN had been turning the middle Bollinger Band into support for several days, and then now this break above is putting this 100-day simple moving average here at 696 on deck. That is our next target. Notice it was a support level back here in March, so it could be a tough level to break. It hit that zone today and pulled back. The close was above the upper Bollinger Band, so you might get the candles working back into the bands. If that happens, then what you want to see going forward is the green line hold. As long as the 50-day simple moving average holds, then there should be more upside potential. A close below that level will be a red flag. So tomorrow, look for a push through the 100. If that fails to break, look for a potential reload back off of the 50-day simple moving average if support holds. This could break out higher. You've got the 200 way up here at $1.03. There was this heavy consolidation here, so keep in mind 75 is going to be a big level. Notice how it was a big support here. So if it does get above the 100-day simple moving average, 75 will be another key level to break. There was this big volume spike back here, with this long upper wick, but it held the middle Bollinger Band. So it looked like they were loading on the pullback. So and today the bullish development is the bullish volume spike. You always like to see that when the share price is breaking resistance. So keep an eye on SYN tomorrow. And then here's a over-the-counter stock, DLLV. Has a checkered history here. I believe this is one of the notorious stocks, but it is one that we've been following in our chat. And this is a chart that we had previously posted in our chat. Most of the OTC stocks we just cover in the chat and the website. We don't post on websites like StockTwits, but sometimes we do. But yeah, for people that like over-the-counter stocks, you know, and you want to, we're talking about them all the time, and we're constantly posting charts and TA on the stocks that are in play that do trade over the counter. If you look here at this candle on the 18th of April, that was our key level to break, and that finally happened today with this close above. So notice this was a multi-month consolidation pattern. You know, it had bounced off the bottom, and what we were looking for was a close above the top of this channel in order to signal a breakout higher. That did happen today, so now we'll see if this is going to be the signal that it wants to push to the next level. You know, it is overbought on Fasto and RSI. RSI has, you know, it has pushed above RSI in the past and held above that level. So, you know, it looks like, you know, with this move, this is the signal that it wants to break out higher. There was the volume spike. You know, the bullish crossovers on MACD on both time frames. So those are all signals that, you know, that the chart is really heating up. And then notice that the candles are forming above all the moving averages. This is the 300, the 200, the 100, the 50, the middle, the 13, the 8, the 4, and the upper Bollinger Band. It's trading above all the moving averages. It's on, it's going on big time breakout mode right now. And so when that happens, we look at a longer time frame. So look at this multi-year weekly chart for DLLV. And as you can see here, it filled this jar back to these 2015 levels. You know, the jar has been filled. And then now what we're looking for is a break above, you know, through this zone here. Through you know, it's got this a little bit of resistance, but if you look at the volume bars, you know, there's not a lot because you know, there wasn't a lot of volume back there. So there wasn't a huge volume during this pullback here. So it remains to be seen how much volume, or you know, how much resistance there's going to be on this push. This was a pretty straight drop. You know, it does look like, you know, there's some, you know, there's going to be some big resistance around 25 here. You know, because that was a big support zone. But you know, it looks like it could move here in between, you know, this 9 cents and 25 cents. So we can see if it can get going. The next big moving average target on this weekly chart is the 200 days or 200 week simple moving average at $1.03. So I mean, that would be huge gains from this level. I'm not saying it's breaking out to that, but as you can see here, this is a very strong uptrend, and it is breaking above resistance. This is only Tuesday. Okay, so you know, this weekly candle will not set until Friday. There's plenty of time for this to pull back and not close above this level. So using a weekly chart before the candle sets, it is you know, you're estimating what could, you're looking at what could happen, but it's not set. So so keep that in mind. This is a good start, but this doesn't mean that it's going to close above this level for the week. It needs to close above that level on Friday to signal that this is going to potentially break out higher. But we're going to see if it's going to follow through tomorrow, since it did have this close above resistance on the daily chart. Okay, so thank you for viewing this chart. If you'd like to learn more about charts and technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.